Good afternoon. I want to thank everybody who joins us. My name is Olha Atamanova, and Ukraine Media Center continues its operation today. Our current event that we've invited you to is devoted to the fuel market, so we will discuss the situation around the country, about the operation of the sector, and we will be talking about the prices for fuel. Joining us in the studio is Serhiy Kuyun, fuel market expert. Good afternoon, Mr. Serhiy. Good afternoon. So, Mr. Serhiy, let's start our conversation with the fact that we all know that there was a excise tax hike. How had it impacted the price, and what is your assessment of the sector operation for the time being? Well, we were seeing each other here in the studio about a month ago, and basically all of my forecasts have come true. Both gas and diesel fuel had no movements within 10 days of September. What's growing, according to the forecast, is the liquefied gas. Talking about the last month, when the prices started growing based on the expectations of the excise tax hike. Now the price has achieved the level of 30 hryvnia per liter, and we expect within the month of September, these 20 days, I think it's about to add 3 more hryvnia per liter, and the average price will be about 33 hryvnia per liter. Well, in August we were not expecting for the power shutdowns that resulted to be quite intense after the massive strikes by the Russians. So within that period, according to your observations, how did that situation impact the fuel market, and what is your forecast for future? All of the experts keep saying that the massive strikes are going to continue, the enemy will continue trying to target our power infrastructure. So to what extent is the sector ready to events unfolding in that area? Well, it's difficult to assess the demand for generators now, because sometimes the restrictions are long. I mean, the shutdowns are long-lasting. Sometimes we have a couple of shutdowns per day. Fortunately, within the last couple of days, we had none of them. So it's difficult to assess the generator demand. But in the second quarter of this year, comparing to the first quarter, during that period of the first September strikes, first September blackouts, the growth was about 10%, but it was also complemented with the seasonal factor. So up to 10% is the generator demand, even at its peak. I mean, when it comes to the gas. In case of diesel, it's about 5%. To evaluate whether it's a lot or whether it's little, I think that we have to take into account the fact that the profit in the market is 15% within the last year. Some traders even may say that it's 20 or 30%. So basically the amount of fuel is bigger than we need, even in case of the most horrible blackouts, because there is a limit to demand, because fuel is a costly energy carrier. It costs like 30-40 hryvnia per kilowatt, and respectively, yes, the fuel will be there, but it would be difficult to accumulate some significant amounts of it, so the demand doesn't influence the prices significantly, just like any other demand factor. Like in the autumn, in the spring, we keep asking what can happen due to intensification of agricultural wars. So those are phantom pains from the Soviet era, that we're about to have problems, but actually our logistics is built perfectly, the borders are open, and we can import, we can bring at least 1.5 times bigger than we need. So that factor has not influenced anything. The predictions are good. Why I'm saying it's good? Because we were due some good luck. So why there was no price growth. First, because the rate was increased not so significantly. It's an everyday market fluctuation. It was within that limit. And another factor is the decrease of cost in the global market. So one factor of price growth was mitigated by another factor of price decrease. So what we're observing, along with the global oil traders, they say that the oil price is going to go down further on. It will continue falling. So given the current competition, we may as well witness fuel price decrease. All those factors are gonna press on the market in both September and October. So if it goes just like the big oil companies predict, so we are due to see some significant decrease. Well, how long-term may this forecast be? I mean, in terms of global market. So we're talking about global market. This year we're witnessing the peak of $93, $94 per barrel, I think, back in March. In July it was 85, and now the price is 72. So the price has fallen dramatically, 20% within half a year. And there are forecasts coming from reputed companies, not like investment banks, but from big oil companies who sense that there is a lot of supply in the market that is pushing the price down, and the forecast is about $60 per barrel. But in our situation, honestly, we were just lucky. We were lucky because there was a growing excise tax that was compensated by the decrease of procurement cost. So there is no space for talks about growth of prices. Well, let me ask you about the import of fuel. First, what sectors are potentially the most interesting for us? And second, we were discussing it many times, like for example the liquefied gas. There was a lot of manipulations over the topic of supplies, and there was probably Russian gas coming to European countries and to Ukraine. Have we been able to mitigate this story, or do we keep seeing Russia finding their ways around the sanctions, succeeding in circumventing the sanctions imposed by us and the countries of European Union? Well, it's difficult for me to understand why, but the matter of Russian liquefied gas supplies was obvious. The logistics was easy there. We were seeing that fuel coming to Baltic countries, Lithuania, Latvia, and then we were seeing, Lithuania, Latvia, Poland, and then basically that fuel was given the passports, of the European system issued, and our customs service cannot claim anything. That's already the European fuel, not the Russian one. And the market experts have come up with the proposals with the names of the companies, names of the pump stations where the fuel was coming from, to impose the sanctions to make sure that this fuel stops coming to European markets. But unfortunately, it resulted in nothing for what we see. But again, it was just a coincidence that the Russians themselves, due to their internal reasons, they decreased the supply to Poland, and respectively the amounts procured by us were decreased too. It's no merit of ours. So again, if this fuel reemerges, I mean, that perspective is not yet shut down for us, because the embargo comes into force for supply of liquefied gas to European Union from Russia, but it's not described perfectly. Basically, what's prohibited is the import of gas mixtures, but the components that those mixtures are made of are not banned, or not all of them banned, and respectively it creates some slot for further supply of Russian gas. And judging by the reaction of the Polish, which is pretty calm, they understand that the fuel will keep coming, and respectively we will continue buying it further on unless we take some serious steps. So talking about the import structure for the time being, what does it look like? I mean by countries. Well, basically it's safe to state that the market found its balance already. The parity is between Polish and Romanian supplies. Well, it's not so much as Polish and Romanian manufacturers, but rather their ports. For example, a lot of fuel is coming from Lithuania through Poland. It's not a Polish manufactured fuel, it's the Lithuanian fuel. A lot comes from the ports, just like in case of Romania, through port of Constanța, which is the main source of supply. And those ports receive fuel from like dozens of countries. It was about 15, I think, or 17 countries in the first half of this year. It was difficult to imagine that US made fuel may come to Ukraine. Nowadays, it's some regular thing that is of no surprise to anybody. Kuwait, Saudi Arabia, India, fuel from all those countries is coming to Ukraine. So again, there's a lot of fuel that has been coming within 2.5 years. 2.5 years that this market and logistics has been growing. We've created truck fleet, tank fleet, new logistic capacities to reload from European tanks to Ukrainian tanks on the railway. Well, it used to be a problem because those capabilities were not sufficient back in their day. But now everything keeps working as a Swiss clock, and even potential problems with fuel are not so numerous. Thank you very much, dear colleagues. If we have any questions on the floor, please let us know. And I would like, meanwhile, to talk a little bit about the plans, maybe about long-term perspective. In short-term perspective, we see that really we were lucky, and the hike of excise tax was compensated by the decrease in global procurement prices. So in say half a year period, 1 year period, what are your predictions? Well, let me remind you that the excise tax hike program is calculated until the year 2028. So every year on the 1st of January, the excise tax is going to grow. It was only the first step on the 1st of September that is supposed to add 2.8 billion hryvnia to the state budget. There was a lot of questions like why? And honestly, I'm surprised by questions like this because it's the third year of the war. We're waging a war, and the taxes cannot be just as low as they used to be before the war. As consumers, as the businesses, we're supposed to pay more taxes if we want to survive. We have to pay for the defense. We have to, because the state budget is the only source of funding of the armed forces, and we are not allowed to spend any Western money for our defense, only for humanitarian purposes. That's why we all have to cover the needs of our army by ourselves. We have to fully cover the defense budget. And it's an open data that there is the lack of money in the budget, the 500 billion hryvnia that we're lacking for our defense purposes. So now there are talks about even the military wages, and when I hear this question, why the tax hike? And there is the only answer: to fund the defense. So the program is gonna be there within the 4 years. I mean, the next stage will be plus 1.5 hryvnia for all types of fuel, and the liquefied gas is going to grow proportionally with gas and diesel. And basically, any taxes push the price up. And the case that we're witnessing today is an exclusion. But again, if on the 1st of January the global price will be at the level of $60 per barrel, it's not like we're going to see any price hike. The price is going to fall because the tax component is important, but the procurement price is yet more important, is the most important component of the fuel price. That's why everything is going to depend on the market structure. Another important factor is the currency. Well, unfortunately, we're not comforted by the hryvnia rate. It's slowly crawling down, but again, fuel is being bought for dollars. That's why the exchange rate is the primary factor of influence. And talking about the long-term factors, strategic factors that we all expect to see is the end of the war. And as soon as we get access to our seaports, we will be able to directly import fuel with minimal logistic and other costs, because now objectively we pay for very costly logistics when we bring fuel from Europe. It's like fuel tanks goes for thousands of kilometers with payment for expedition services, trader services in the West, and then as we get access to our ports, all of that burden will be relieved. So according to my calculations, all those costs amount to at least 3 hryvnia per liter of fuel. That will again serve us as a caution as we increase the taxes. So hopefully all of the factors are going to play in our favor. Mr. Serhiy, thank you very much for all of the details for this broadcast, and I want to thank all the journalists for your interest, and we continue working together for our victory. Glory to Ukraine, glory to the heroes.